This is the Portfolio Coach Podcast, featuring Derek Davis, founder and CEO of Portfolio Coach. For more than 30 years, Derek and his wife Jennifer have been coaching their high net worth clients to financial prosperity.
Hey, Derek, it's good to have you back. Welcome, everybody. This is the June 17th, 2022 edition of the Portfolio Coach Podcast. And I'm joined by Derek Davis, founder and CEO of Portfolio Coach. And today, Derek, let's talk about what is Portfolio Coach, and not in the context of, okay, it's an application on the computer that I can use to make millions. What is it to you? What is Portfolio Coach to you?
You know, Portfolio Coach to me is my opportunity to give back, I guess, to the smaller investor and help them out. You know, we've been doing this for over 30 years and we've helped the rich get richer, but we really want to get out there and help the little guy, you know. And so, you know, professional investors like ourselves are constantly doing trades, and we do not believe in buy and hold, because basically you're going to give back all of your gains during a market correction. What Portfolio Coach does is takes our algorithm and moves it over and gives you the trades. And so on a weekly basis, you'll be allowed to have those trades and make them in your own brokerage account. We don't manage your money because, you know, you don't need to pay anybody a fee right now when you're just getting started and you need to grow your assets. And what we do is basically try to protect you on the downside, so you can make more money on the upside. If you lose less, you end up making more. So that's what Portfolio Coach is our effort to, you know, just to give back to society. We've done very well, and now hopefully we can make a difference.
Thank you, Derek. So at the risk of insulting your intelligence, using a lot of market words, using a lot of industry words, that for those of us that have been around the market for a long time, we get it. We understand what you mean by upside, downside, portfolio, market trends, all of those kinds of things. Buy and hold. Let's dive in a little bit more. Okay, I mean, let's take this from the context. I'm a 19-year-old sophomore in college. I got scholarships and I got a little money in my pocket, or I took a class at school about investing and it really piqued my interest. I don't have a portfolio big enough to have you and Jennifer manage my money and make me richer. Bring it down to my level a little bit. When you talk about buy and hold versus active trading, let's break that down a little bit. And then we'll break down upside, downside, and we'll get into some of why Portfolio Coach makes a difference for me with the cash that I have. So yeah, let's talk a little bit. Let's elaborate. Let's put in the mind of let's say someone who's maybe not that college example. Let's talk about somebody who's in their first job. They got a 401k at work, but that's going to grow slowly because they're, you know, maybe taking the smallest percentage of their salary out for that. I'm not really thinking about my retirement boat down in San Diego. I'm really thinking about, like, how do I actively build some wealth now? And I think that's where Portfolio Coach really fits in. One niche, it's not the only customer it serves, but that's one. Let's start from that perspective.
Yeah. So, you know, I guess as a first-time investor, you have limited funds. And so you're going to have a hard time getting professional customized help. With Portfolio Coach, you can go on and you can pick out your own customized portfolio that we've built for you. We've had our analysts go in and pick stocks that go onto the team. A basic team has 10 stocks. Those 10 stocks have a 10% allocation. So if you had $1,000 and Tesla happened to be one of your stocks in your portfolio, you would buy $100 worth of Tesla. And Tesla goes up to 1,200 and you do really well. And then, you know, the momentum on Tesla starts going down. And so we would send you a sell signal and you would sell Tesla. Now, Tesla's still part of the model, but we're just waiting for it to correct before we buy back in. Now, Tesla's down at $600. Hey, you know, it looks like it's bottoming. We'll send you a buy signal. You'll buy back in. You just saved yourself $50 out of your $100. or even more so than that, because you made money. $100 in Tesla became $300, and now if you would have bought and held Tesla and not actively sold it, then you would have lost $150. So you would have given up a lot of those gains. We just don't want you to give up those gains. They're too hard to come by, and in the long run, you need those gains to build a nice nest egg for you and your family. So that's what we're there to do.
It's interesting that you bring that to light. You're talking about $50. $50 could be $300. It could be $150, and that doesn't sound like a lot of money, especially with inflation, what it is today. I mean, $150 is a tank of gas for some people, right? But you think about when we're talking about the millions or hundreds of thousands, right? So these intelligent strategies work not only at the small incremental level if you're just getting started, but it's that same concept that's helped you make millionaires, multimillionaires.
Certainly, it's exactly the same strategy. And when you start out, you may not have millions to start out, so we got to help you try to get there. You can't perhaps afford a share of Tesla at $600 or $1,200. So you're going to be buying fractional shares to kind of start out with if you have a smaller account, and then grow it hopefully into a full share and go from there.
So there's an important point you're making there on this fractional share buying. So some of you may know, some of you may not know what that's all about. There's brokerages out there. Like let's take Robinhood for an example. I'm not saying this is the only one, and this is not a promo for them. But with whatever money you have, you can buy a portion of a company as opposed to having to go in and buy 100 shares of Tesla at $600. You can come in with $100. You can come in with $200. You can come in with $1,000, and utilize these important trading signals that you're talking about to start to build wealth even at a small level, right?
Right. Yeah, because you need to get that balanced allocations. The models are built on 10 portfolios at 10%. You may be able to afford a share of a $10 stock, but it becomes more difficult to afford a share of a $2,000 stock. So the fractional shares all work out so that you hold the same dollar amount of each share versus, one share of Home Depot is going to be different than one share of Amazon.
So thanks for continuing on that. You talk about upside, you talk about downside, you talk about protecting. I think sometimes that's a word in the financial markets that gets overused and inauthentically sometimes. When people talk about protecting your wealth, they're getting money on every trade. They're a broker that's getting a piece of every transaction you do. So for them, whether you buy or sell, and especially if they're an active trading portfolio, if they're buying and selling, they're getting paid up and down all the time on the transaction. Let's talk about how you're protecting by upside and downside active portfolio management. And let's start at the point of on a weekly basis, what should my behavior be as a portfolio coach member?
Yeah, the key is to go to these. The key to Portfolio Coach actually was Robinhood. Robinhood brought in no cost trading, and what it did was it forced the Schwabs, the TD Ameritrades, the Fidelities of the world to come down off of $10 a trade down to $5 a trade, and ultimately now they're at no cost trading. Portfolio Coach wouldn't work if you were being charged $10 a trade, because all of a sudden, when you need to buy Tesla or sell Tesla, you're paying $20 to get in and out of something. So here we're an RIA, registered investment advisor, and so we don't charge on the number of shares we trade, and so we don't do any commissions on that. Broker dealers, which you were referring to, certainly love for you to trade, because if they're making a dime a share and you're in and out of a stock, then that you're an ideal client for them, because they're just trying to create revenue for themselves.
So wrap this into my daily or weekly life. in order to be an ideal beneficiary of Portfolio Coach's powerful results. Now, I want to come back. We have this on our video library, and it's easy to go back and get more understanding of this. But for the purposes of our call today, the system that Portfolio Coach is built on is over 15 years of tried and true, proven trading signals that beat the market and beat the market significantly over that time horizon. So I asked this question, and for our listeners, understand that this is successful. I mean, it's beaten the market over the time horizon that it's been tested. So you can have a high degree of confidence that if you follow the signals and you do the Portfolio Coach methodology for success, you're going to increase your wealth. But put it in context for me, Derek. Like if I'm a Portfolio Coach member and I'm really committed to taking control of my own wealth management at this stage of my life where Portfolio Coach makes sense. I don't have the portfolio that needs your expert guidance to actively manage as a RIA, and that's Registered Investment Advisor. For those of you who might be new to the concept, what's a week in the life? What should I be doing to really maximize the benefits of Portfolio Coach?
You know, Portfolio Coach was designed to actually give you your life back. You know, my analysts and I, we're the ones that do this full time. And so basically, once you open up your brokerage account, we'll use Robinhood for an example, and you put your money in there, you go and we'll help you choose your portfolio, or you can pick your portfolio that you want to follow. And then on Saturday or Sunday, you just go log in, or we can send you a text or email if you want on the trades that we suggest you make on Monday. And then first thing Monday, you buy or sell a couple stocks typically out of the 10. Maybe you have no trades, and it'll tell you no trades. And then you don't have to, try to study the charts and the PE ratios and the everything else that, goes into our analysts are looking at constantly. What we want to do is give you your life back, and, you can look at the trades on Saturday and Sunday. If it feels right, you should do it. If you decide not to do it, it's your money. Nobody cares more about your money than yourself, although we're trying to really help you do better. So, your basic week is live your life. Our job, this is our job, is to help you do better. And you can, by just following the signals, you should. Historically, you would have done better, and hopefully, 15 years down the road, you will have done better as well.
So I know you really well, and I know that that's the real deal. I know that that's authentic, and that comes from a pure place that you really want to help others. It's sometimes that might sound a little too good to be true for some of our newer listeners, newer members to Portfolio Coach, that it's really that simple and that you're really that devoted to helping me. What would you say to the skeptics? What would you say to those that are like, I'm not going to sign up because it sounds too good to be true, and the results charts look, they look too good to be true, and it's been my experience that anything that sounds too good to be true usually is, and it can't really be that easy. It can't really be as easy as logging in on Saturday and Sunday and setting up my trades in my portfolio or my Robinhood account and letting it go for another week. It can't be that simple, right? It sounds too good to be true. What would you tell me if that's what I was feeling right now, having listened to what we've talked about so far?
The charts look the way they do because we have 15 years of returns. And instead of getting our 7% from the S&P, we're getting 15%. 15% doesn't sound a lot if you look at the Bitcoins or the Teslas of the world, over a short period of time where they rocketed higher. You're not going to get unbelievable returns from Portfolio Coach. They're tried and true. They're solid. They're a good number, but you're not going to get 100%, 200% gains or I've heard some guy on the radio selling this thing and it was, 5% a month. You can get 5% a month. You're not going to get 5% a month. If you get 5% a month, he wouldn't be on the radio doing ads and stuff. Our whole system is this isn't my job or my company to make money. I have a real job and do pretty well at that. And I'm focused on that. This was built out, with my sons. I invested in some web designers to help me bring my algorithm into a friendly app, I guess, or development so that they can, we can scale it and it doesn't cost me any more time or money. And we can help, 1,000 people, 10,000 people, 100,000 people, because the trades are already built on my quant and algo that our analysts have put together. And we're helping our big clients, and you're kind of copying their trades. So it isn't, I guess it's not really costing me anything to help you. So why not? Then my son's needed, he's the one that came to me and said, "Hey, who's here to help the little guy? I only have $1,000. What am I supposed to do?" Well, that was 6 years ago, and now he has $5,000. It's going to take time, and it's going to take some money. I can, if you have $1 and I can, it doubles every 5 years. In 5 years, you'll have $2. And, that doesn't sound really exciting. But it just takes time. And if you could double your account every 5 to 6 years, in the long run, you're going to be doing a lot better. And that's what we're just trying to help people with. So I don't know that I answered your question. But we're just, it's our goal to help give back, I guess, and cover our expenses. I mean, at $20, $30 a month, we're certainly not going to get rich, but hopefully we can cover our customer service expenses of people I have to hire to answer questions for you guys.
No, I think you answered the question perfectly, and I think the pathway to financial prosperity is a journey. We love the stories of people that nailed it with Bitcoin. They got in super early. They exited when it was at its peak. They got lucky and didn't have to partake in the downside. And so they're rich, and or people who got in at Tesla really low and then bought a Tesla with their returns. Like, those are fun stories, and we all want those stories. But we're talking about 1% of people that you get to hit the jackpot like that. And so, the road to financial prosperity in the markets historically is a journey for people. And, you mentioned something, a 7% return. There's been periods economically in this country where people would have killed to get 7% return on their money. And the old rule of 72 came into play. Your money's going to double every 7 years if you get 12%. Or is it 6 years at 12%? I can't remember exactly.
6 years at 12%, or 10 years at 7%. Yeah.
So, I mean, think about that for a minute. $1,000 today is with the success of Portfolio Coach's algorithm and quant, which are two really fun finance terms. The algorithm is the mathematical model that determines the quantitative analysis that tells you what to buy or sell or hold. But you take a look at that and you think there's 1,000 is 2 in 5 years, and 10,000 in 2 years is 20,000. And it doesn't take long until those duplicative gains start to really add up. And if you're a smart investor and you start at a younger age and you're wise about how you spend your money and invest your money 25, 35, 40 years down the road with a career, and you're sitting on more than a nest egg. You're sitting on wealth that you can utilize to live your lifestyle better, invest in a startup, put back into the market, and double up again. So I think you answered the question really well.
Yeah, it really just takes returns and time. Your 10 becomes 20, and then 40, and then 80, and then 160, and then 320, and in 30 years, $6,000 off of that 10,000. If you can double every 5 years, that's $500,000. So that can really help you in retirement. So Portfolio Coach wasn't built for the guy that's 60 years old that already has $1 million. He could get $2 million and $4 million, I guess, in 10 years. But it's built for the smaller investor and really just trying to help them out and so that they can retire more comfortably. When they're most of our subscribers, by the time they retire, you and I won't be here, so we'll be on the other side of the dirt. So, but hopefully, we have some younger, brighter, smarter people take over for us and keep this going to really help people.
Yeah, well, I appreciate that perspective. I think back 20 years ago when I was in business school, getting my finance degree, and we thought doubling your money every 6 years, but that was as good as it got. We didn't have at the time some of these major acquisitions, these big pops that we've seen. Bitcoin obviously didn't exist. We saw the NASDAQ go up and down and crash actually. But it's interesting to reflect on that time period and say, well, gosh, if instead of doubling every 6, if I'm doubling every 5 over a 40-year career, I actually get another 2 doubles in that number through the portfolio coach methodology.
Correct. And so if you would have, at the end of your doubling period, you would have at 6 years or 7 years been at $1 million. You'd be at 4 million with just getting that extra doubling every 2 years less type thing. So yeah, no, it works out. It just takes time and return. So we're in charge of the return. You're in charge of the time, I guess.
Well, and back to the point that you made earlier, as far as time is concerned, I mean, it sounds to me like I'm committing 10, 20, 30 minutes a week.
Yeah, no, we're trying to give your life back too. Most people that are just starting out, maybe you have kids, and those kids are just learning to walk, and now you got to chase them around the house. And, there's better things to do with your time than look at the PE ratios and the earnings and read the 10 Qs and all of that we have to do on this side. So.
Yeah, well, I'm a believer. I made a deal with my kids. We're going to wrap up this episode here, but I made a deal with my kids a month ago. It's a little tricky because 2 of them are minors, and so they can't have their own Robinhood account. But we're going to sort that out. I made a deal with my kids: if they'll finish reading one of my favorite books, which is Rich Dad Poor Dad, and do a book report for me on the book, then I'm going to start their Robinhood account with $1,000 in it, and I'm going to pay for their portfolio coach membership so that they can, in their teens, at an early age, begin to understand how, if you commit early, you stay consistent, and you have a good guide like portfolio coach, when they're going to be 30 years ahead of where I was.
Yeah,
they're going to
be. No, they will be. They'll be doing great.
Yeah,
they'll be learning a lot, and they'll get up every Saturday morning when the trades come in, and they'll want to log on and see if they got any buys or sells to do. So it's a great learning platform. So.
Well, all right, Derek, that's a wrap for this one. Next time we talk about fundamentals. It's going to be a little bit more analytical. It'll be something for listeners to dive into, and so for those of you that are listening and following and subscribing, I think it's really important. I think you'll find a lot of value in that. We don't necessarily want you to feel like you're going to be coached to be a fundamentals expert, but understanding the fundamentals and why these trades are successful, why these signals work, and how that fits into market sectors. That's going to be a really important thing to listen to, because it's going to elevate your level of trust in portfolio coach. So Derek, it was good to talk again about these things. You know how much we enjoy. I mean, I'm a nerd on these things. I just love talking about how money works and how to expand it and grow it and protect it and build it. So it's been awesome. It's been a great session today.
Hey, great catching up with you. Look forward to next time.
All right. Tune in next time.
Take care. Bye-bye.
Visit get.portfoliocoach.com to get 90 days of gold subscription for free.